We're going to visit with Brian Hoops here in just a moment to get his thoughts about these markets. First, let's talk about some of these other crop conditions. Cotton condition continues to fall. Last week, nationally, we were down 7 points. This week, we're down 6 points nationally. In Texas, 34% of that crop is in good to excellent shape. That was down 8 points. Georgia dropped 3. Mississippi was actually up 1. But Alabama down 2 points and North Carolina down 4. Rice conditions, they were basically unchanged as far as individual states are concerned. California, though, even though it's been hot and dry there, California says that 100% of their rice is in good to excellent shape. Louisiana 65%, Mississippi 75%, Arkansas steady at 59, and Missouri steady also. And spring wheat condition actually on the national basis increased just a fraction. Idaho is down 7%, Washington down 3. Of course, harvest is taking place in those states. Montana was up 6%, South Dakota was down 5, North Dakota down 2, where harvest is taking place there as well. All right, let's go to the corn market this morning here. First thing, last night on the overnight trade, a little bit on the weak side, still weak by about 3/4 on the September. December's down a penny, 367 1/4. We'll come back to that number in just a moment, but let's look at soybeans. Now, soybeans actually on the lower side by 9.5 cents. Yesterday, we were up double digits, so we've almost given back what we gained yesterday. September down 9.5, November down 9 3/4, 857.5. The wheat market, though, today on the higher side to begin the day with the September up 2 in Chicago. It's at 475. Kansas City wheat now up a half, 389.5. The rest of those contracts steady to lower. And the Minneapolis wheat for September down 4 1/4 at 494.5, and cotton losing ground down 54 at 57.67. Brian, what about this? Brian Hoops, by the way, with Midwest Market Solutions. What do you think of this corn market here? It's been a narrow trading range. Do you think that there's still some in the trade that say that they want to go back down here and look at this 363 and see if we can probe below it and what happens?
Yeah, it's a good question. We're kind of finding some support from our lows that we made last spring. That's right around that 366, 367 area in the December contract, and that's where we're trading at. We're just kind of consolidating right in this area. But if you look at continuation charts, and a lot of the trade does, the support from last May turns into about 360.5, 359.5. That could be a target where we may slip down towards if we cannot find any speculative buying interest. Right now, the trade is seeing some weakness and some choppy action because you don't have that speculative community, the large spec funds stepping into this market and aggressively buying it. In fact, they've been selling over the last several weeks and trying to pare down those long positions. So until we get into a situation where either we've got some yield potential that's being robbed, maybe an early frost or something like that, or we start hearing harvested data that suggests these yields are much less than what the USDA has said, you're probably not going to see the large speculative community step in and be an aggressive buyer of this market.
Which is kind of interesting, too, because Tim Ross's weather map shows a lot cooler temperatures over the next few days, which would slow an already behind crop. That leaves a lot of room for curiosity. Brian, those are great points. We'll come back and get your points on the livestock trade next, so stay with us. We'll be back in just a moment here on the Market Day Report. Let's look at the futures and see where we're at now, and then get Brian's kind of his response on all of this. August live cattle. The only reason we report this here, we are close to the end of the month, yes, and the August will expire here pretty quick. But sometimes some of the cash kind of takes its cues from this August contract, especially when they converge at the end of the month. We're down 15 at 105.33. October's down 85 at $100.15, and the December's down 80 over there in that fat cattle contracts. The September feeder cattle down $1.20 at 134.80. October down $1.13 at 133.25. The hog market with expanded limits today after exceeding expanded limits yesterday into the higher side. October's down 72. December's down 95 at 62.08. February down 115. Still a lot of volatility in the hogs. But Brian, I want to go back here and talk about this cattle trade. We've already got asking prices and bids about $6 apart. We've got a holiday coming up on Monday. Last week, we basically processed 12,000 more head of cattle than we did even back before the Tyson plant burned. There's a lot of different facets to this cattle market that you got to get your arms around.
Yeah, you're exactly right. You know, the August contract goes off the board this week. It's right in the territory where it should be, right in that cash area. We could see steady type cash again this week. I do think the Packers, with their record margins that they have, they're just starting to lose some of those with the box beef turning lower. But while they have these margins, I expect they're going to keep these kills pretty high and try and take advantage of that. So that should be a supportive feature for the August contract and for the cash markets this week. But certainly October, well priced underneath where the current cash is when August goes off the board. That'll leave us at a hefty discount, anticipating some big supplies coming in the third quarter. That's going to weigh on prices and pull the cash market down. So we're already discounted here, and you're probably not going to find a lot of selling interest as a result. The Packers are going to take advantage of that. Right now, the futures market is kind of reacting to the show list numbers, which were a little bit larger and getting spooked by this cash market.
Do you think some of that larger show list is just the fact that some of these cattle have come off of these pastures that are in pretty bad shape, especially in Texas, Oklahoma, Panhandle, western Kansas?
Yeah, we were talking off the break how bad the ratings in the cotton market have dropped in Texas because of drought, and that's exactly what's going on. Some of these cattle have to come off the pastures just because pasture conditions have certainly deteriorated with the extreme heat and the dryness that they have had over the last 4 to 6 weeks.
I've got just a few seconds here left, though, but what about this hog market? A lot of volatility.
Yeah, extreme volatility on Friday, limit down, and then on Monday you go limit up with the expanded limits. Seeing triple-digit losses this morning. A lot of times you can explain the movements by fundamentals. I don't know that the fundamentals have changed from Friday to Monday back to today to see this type of volatility, other than you're seeing just a lot of money being poured into this market, taken out of it, all dependent upon what our ideas are that's going to happen with China and how much of this pork we're going to export. If we're able to export a lot of pork, we'll probably price too cheap. If we don't get an agreement reached, we're probably either fairly priced or maybe even overpriced at this time frame.
All right, Brian, thank you very much. He is the president of Midwest Market Solutions. That is Brian Hoops. He is based in Springfield, Missouri with the latest there, Christina.